This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. It's 3/15/23, show 474. Well, one heck of a volatile trading week so far, Nick.
It really has been, Kerry. This is one for the ages, and it is a quadruple witching options expiration on Friday. So not a shocker, but this is one heck of a volatile trading week.
Hey, and let's not forget one of your favorite indicators is the vernal equinox.
That's coming up. We do have the spring equinox coming up. That's just about a week away, coinciding pretty much with the Fed meeting that's coming up as well next week. And everybody will have their eyes glued to what Fed Chairman Powell will say this next meeting. Will he hold tight, do nothing? Will he cut? Will he raise a quarter? We don't know. Only time will tell. But this guy is stuck between a rock and a hard place right now.
Mm-hmm. Yeah, I wouldn't want to be in that situation. So Credit Suisse appears to be on the rocks, huh?
Yeah, well, this stock has been an awful looking chart for quite a long time. Anybody that has looked at Credit Suisse over the last few years, you'll see the stock is making new lows today. And I don't mean lows like all-time lows. They are making all-time lows today. So the stock now trading under $2. It doesn't really seem to me that it's solvent. And, we've had 3 U.S. bank failures in the last 7 days, and now it looks to be spreading to Europe. But the European financial system is in a way worse shape, is in horrific shape, really, when compared to the U.S. System. They've gone negative rates, as you know. Now they're trying to get out of that. And just a Credit Suisse headline is just a disaster. And really what happened was it looks like their largest shareholder, Saudi National Bank, said it can't provide any further financial help. And that has spooked the markets. And then, the Credit Suisse chart being as bad as it has been, we'll see if it spooks, Deutsche Bank or other financial institutions over there. And, UBS is another one. And there are so many. But that could really turn into a domino effect. And tomorrow, the ECB, ironically, is going to hold their meeting. And we'll see. They were expected to raise rates by 50 basis points. I guess that's off the table now.
And you think the Fed's 50 basis point increase is off the table as well?
I do. I think, if anything, they would probably go a quarter. But I don't even think they'll do that. In fact, I believe that the Fed funds futures are actually saying that they may even cut. So, we're really looking at a situation here where the Fed is really, really stuck here. They've been trying to fight inflation. They've waved that flag that they're going to defeat inflation. And we know that inflation isn't really going away anytime soon. It's roughly at about 6%. And I think they're really, really stuck here. So whatever they do, there's going to be a repercussion. If they do decide to cut rates, we're going to see inflation kick in. We'll probably start to see it kick in a big way.
All right. Well, yeah, it sounds like inflation's dead. Long live inflation.
Well, it's really, these guys, this is what happens when you play Monopoly Man with money. You're just, cutting rates, leaving rates down basically at zero, doing this QE. And eventually, something's gonna give way. This is all an inverted yield curve problem, and that doesn't get fixed very easily.
Yeah, this is what happens when you play God with Monopoly money.
And that's really what it comes down to, Kerry. So, we got to, they got to face and face the music now. And the music is not playing, a favorable rock and roll tune. It's favoring a somber jam.
Yes, it is. Hey, but gold and silver as well are on fire, as is the dollar. So the dollar is up, the Dixie's up 1.3, and which is like a huge move. Like seldom do you see moves like that unless there's real turmoil. And gold is up $30 an ounce.
Yeah, gold's on fire today. And gold, honestly, has been on fire now for basically 5 days. So yesterday, gold did a little bit of what we call a pause. And today, it's skyrocketing again. And you even have silver joining the party, but not to the extent of gold. So when I see gold up and the dollar up simultaneously, that's telling you there's real fear out here. We also have a big spike in the VIX today. The VIX is catching some good fire. So when do you see, the dollar and gold up? And that should be a real headwind, a real warning sign that there's a real crisis out here. There's a real problem, and we'll just have to wait and see, exactly how this all shakes out. But the irony of it is we always warn about options X week. I always try to stay neutral during options X, and thank God I am.
That's for sure. Well, hey, the Dow is down nearly 700 points today. S&P's down 74. I mean, if that's not flashing a warning sign here, what is?
Yeah, I mean, that's, the funny thing is yesterday we had a pretty big bounce in the market by the closing bell. And the day before, the markets hit a big support level. The spiders around that 3,800 level, the S&P 500, that is. And the markets, everybody thought that it was all clear. And today, we're pretty much reverting right back to the downside. But we take out that 3,800 level on the S&P. I would tell people to watch out. This thing could get really, really ugly really, really quickly. If you think today is bad, there could be, worse coming. So, in times like this, you don't want to be a superstar. You want to just be cautious and let the market give you a little bit more information. We're probably going to get a lot of central bank jargon going on, especially as the Fed meeting is next Wednesday, just a week away from now. And, we'll just take it slow and cautiously into that.
In these days, as the old saying goes, you're not concerned about return on investment. You're concerned about return of investment.
That's right. You want to live to fight another day, because this is not something that you're going to see. This is very reminiscent of 2008, a totally different reason for triggering a financial crisis. But when you got a financial crisis going on, that's the bloodline to everything. I know people have been saying to me, Nick, rates are going to go down. The home builders are going up. Well, I got news for you. Home builders are tanking today. And, that's with rates even pulling back. The 2-year Treasury note yield is down 40 basis points, roughly underneath 4%. And yields are pulling back. And guess what? The market is spooked by that. So who's going to borrow now? That's really what it all comes down to. And I think that, people have to just realize this is a system that's built on debt. And the credit markets are really under pressure right now.
Well, in other news, producer prices look like they're coming down a bit, huh?
Yeah, they leveled off a little bit, but that's old news. That's baked into the cake already, right? So, yesterday we had the CPI number. I can't even tell you what it was because nobody even cared. Everybody's just looking at, everybody's just looking at what these banks are doing. Do I need to get my money out of the bank and put it in another institution? Is it going to be covered? Anything over 250,000 per single person. So, everybody's scrambling now to worrying about that. And that's a real concern as well.
Yeah, well, I believe that by backstopping the SVP depositors and the signature depositors, they pretty much sent out the message that depositors are going to be covered no matter what. But push comes to shove, that becomes super inflationary. You got to print up money. You're right. So
without a doubt. And that's why I say the Fed is really stuck between a rock and a hard place. I mean, just think about it. When they bailed out Silicon Valley Bank, and they also bailed out the depositors from Signature Bank, like you said, they sent that message out there. Now, is every bank going to be covered? Is every bank going to be, made whole? I mean, look who was on the balance sheet there, or look at the depositors in Silicon Valley Bank. I think Roku had 25% of their capital there, right? So you're talking
billions.
That's a big bailout for the depositors. Now, I'm all for that actually, because I don't think the depositors should, be on the hook for this stuff. But, this is what this system is built on. And it, before it used to look pretty solid. Now it looks like a deck of cards.
Hey, remember what I always say, that the root of the word confidence is con, right? And it's all a big con. So
yeah,
but they will do it this time. Though the good thing is, if there's any silver lining to this cloud, is that they're actually getting rid of the shareholders and the creditors, the bondholders of the bank, and flushing out the management, which if they had done that in 08 and 09, we might not be in this situation now.
Yeah. And, the other thing is, if you go back to 08 and 09, we had the TARP, right? Everybody remembers that. What is going to come out of this one? What is the fix here that these so-called masters of the universe are going to come up with? And I don't have an answer for that. I don't know. But I would just say, the charts have been pretty ominous for a while, and you have to just continue to follow them. That's the only thing that, can navigate you through these waters.
Agreed. And you've been sounding the clarion call for months now, Nick. We appreciate that. I know a lot of you out there have paid attention to what Nick has been telling you, and we'll see how it shakes out. In any event, that's it for today. We'll be back on Friday. Make sure you go to Nick's site, inthemoneystocks.com, see how he's beaten the indices for decades, and see how many of his recent calls have come to pass. And while you're at it, the Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Write your comments down below on the YouTube channel. We'll get to them shortly. And send your emails to KL@kerrylutz.com. Nick, we'll see you Friday.
Sounds good, Kerry.